my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. It took me a while to see the latest two patterns here, as they were disguised in amongst two earlier patterns that had worked well. I have to admit they were clever disguises. The first of the earlier patterns that prompted these later ones was the March to May reverse head and shoulders pattern. The second was a March to May ascending triangle. Now the second pattern, the ascending triangle, had been constructed in between March to June, between the March to June uptrend, currently at 1142, and the flat-ish trendline topside, also currently, it's currently a little bit higher at 1152. Primary targets for both of these were reached on the 17th of May with an unusual key reversal up, which was also an indecisive spinning top, but with a long tail on it. The reverse head and shoulders pattern utilised the same flattish trendline topside, currently 1152, but was from earlier in March until mid-May. Its target's topside were also achieved on the 17th of May. These two patterns constructed two new patterns that have been triggered, one at the start of June and one this week. See, the combination of the ascending triangle and the reverse head and shoulders bottom created the first larger pattern, which was an early March to early June sideways triangle. Now, I am the first to say that this is not a good looking example of such a pattern, but do say it still has merit. What disguised it for me was how the market exited the triangle through the lower trend line by just going sideways instead of a sharp move lower. Nevertheless, this is a legitimate pattern, and I've placed some potential targets for this pattern below. Target X is the primary target in the 953 area, and target X1 is the harder to reach secondary target in the 700 area. Target X has already been reached. The second pattern is obviously a related one, in adjacency if not in style. It is to take the formation between the head and second shoulder of the earlier head and shoulders pattern in April, with the subsequent topside targets making the head in May and, to be honest, limp looking second shoulder formed in June to make a regular head and shoulders top pattern between April to June. The neckline is currently 1039 and was broken this past Monday with a bearish opening long black Mariposa, long enough to almost be a bearish open and close long black Mariposa. The primary target X2 for this pattern is in the 922 area, and target X3, the harder to reach secondary target, is in the 800 area. Target X2 is not that far away now, but it sits on a significant congestion area, which is 872 to 909. That, to be honest, has not really showed up during the move higher back in February. However, it now contains the 50% Fibonacci line for the May 19 to March 22 move at 891, and the 50% Fibonacci line of December 2017 to March 22 move at 887, plus just emerging out the top of this congestion is a slowly rising long moving average, currently 911. It'll be interesting to gauge the market's response to these supports as it approaches them. Chicago corn. The reason for the lack of further bullish action at the end of April after a number of bullish patterns can easily be seen, and one that I've spoken about often. To recap, it was the market running into the middle time overhead, currently at 859, of the April 2020 to September 2021 bullish Andrews pitchfork. You can see how this middle time had become a rolling higher resistance back in early March, and then again at the end of April. The result of all this was a fall in prices all the way down to the lower time, currently at 697 of the same bullish Andrews pitchfork, and this week the breach of it, and quite possibly a breaking of it. This is a crucial event if it comes off, and it is why I have drawn my first bearish Andrews pitchfork here for I don't know how long. The market is currently sitting in the middle time, and that's currently at 684, having just pulled up from the November 2021 to date breached uptrend, currently at 674 even, and shudderingly rejected, for now at least, the the combination of the 50% Fibonacci line of September 2021 to April 22 move at 661, plus the rising long moving average below, currently 653. I have also labelled the action since mid-May a bear flag, but not labelled any targets below. Well, because they've already been achieved. We have that much longer term support below this long moving average. There's the lower time, currently 630 even, and the interesting August 20 today uptrend, currently at 627, plus some Fibonacci congestion at 623 and 621. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.